Hey guys, welcome back to another video. In today's video, I'm going to be going over 3 energy stocks that have completely outperformed the market over the last year or so. And then I'm also going to do a discounted cash flow analysis for each company to figure out what the intrinsic value per share of each company is, so that we could figure out what a good buying price would be from a value investing perspective for each company. I'm going to look into the first quarter earnings results for each company here to compare them against one another. And lastly, I'm going to do a quick little competitor analysis to see just a couple of the different ratios, like their gross profit, their return on assets, and their net profit margin, to see which company is outperforming the other companies in this industry. So thanks in advance for leaving a like on this video. It really helps this video get out to more people on YouTube. So thanks for that. And let's get right into it. So we can see right here that the S&P 500 is down about 10% over the last year. But the first stock, as we can see right here, ExxonMobil, is up about 41% over the last year and about 7% over the last 5 years. ConocoPhillips is up about 43% over the last year, and then they're up about 101% over the last 5 years. And Chevron is up about 37% over the last year, and they're up about 37% over the last 5 years as well. So we can see here, this is ExxonMobil's main website, and they point out that they're aiming to achieve net zero emissions. They actually made some progress in the first quarter, because in January they announced their plans to basically achieve net zero greenhouse gas emissions for their operating assets by 2050. And then also they made a little bit of progress by investing in some global clean energy holdings, and then they're also planning to deliver sustainable aviation fuel for Richard Branson's Virgin Atlantic airline company. So right here we can see their income statement for the first quarter of 2022, and they're basically comparing the results of 2022 to 2021, and we can see that their net revenues increased from 59 billion to 90 billion year over year, and their net profits increased 2.7 billion to 5.4 billion dollars year over year. So that is some pretty impressive growth. Then we can see their balance sheet right here. Their total assets increased from the fourth quarter of 2021 to the first quarter of 2022 by about 338 billion to 354 billion dollars. Most of that is obviously property, plant, and equipment, because that's where most of their business comes from, is just exploring and producing and manufacturing natural gas and crude oil. And then we can see right here their total liabilities increased from 163 billion to 178 billion dollars. And most of their business is financed by debt here, but it is split almost 50-50 down the middle, with 178 billion of it being debt and then 176 billion of it being total equity. And then lastly, we can see from their consolidated statement of cash flows here that their net cash provided by operating activities for the first quarter of 2022 came out to be about $14.7 billion, which is up from $9.2 billion just 1 year ago. Their free cash flow was about $11 billion, which is obviously their operating activities minus their property, plant, and equipment. They invested mostly in property, plant, and equipment in the first quarter of 2022. And then we can see from their financing activities that they reduced some of their short-term debt, spending about $2 billion there. And then they gave out cash dividends in the first quarter of 2022 to ExxonMobil shareholders, coming out to be about $3.7 billion. And then also they acquired about $2 billion of common stock in the first quarter. So that's a lot of value. That's about $5.7 billion worth of cash just returned back to shareholders. And then on top of that, in the first quarter, they also announced that they were going to increase their share repurchase program up to $30 billion through to 2023. So they're basically going to return about $30 billion worth of value back to their shareholders through to 2023. And so if we look at this discounted cash flow model that I did for ExxonMobil here, all of these metrics I got from Yahoo Finance. So they're basically estimating, the analysts on Yahoo Finance are estimating that Exxon is going to grow by 23% year over year for the first 5 years, starting in 2021. And then they also have about 4.2 billion shares outstanding, as well as free cash flow for 2021 of about $36 billion. And then if we take the total amount of cash minus the debt on their balance sheet, we get about a negative $36 billion balance. And if we take all of these metrics into account, keeping in mind that we want to get at least a 10% return on our investment annually, we can see the intrinsic value per share that we would want to buy in at is about $233 per share, with a 30% margin of safety of $163 per share and a 50% margin of safety of $116 per share, which compared to their current share price puts ExxonMobil at a pretty heavy buying opportunity, considering the fact that they're trading at $86 per share. So they're trading well below a 50% margin of safety, which in this case, based on these metrics, means that they would present a pretty good buying opportunity at the current share price. So let's see what the analysts think for ConocoPhillips here, which is currently trading at $86 per share. So obviously, similar to ExxonMobil, ConocoPhillips also develops and produces crude oil and natural gas globally. They're one of ExxonMobil's biggest competitors. And we can see right here from their financial statements, this is their income statement for the first quarter of 2022, that their total revenues came out to be about $19.2 billion. And then that's up from about $10 billion in 2021. So they pretty much almost doubled their revenues year over year, which is pretty impressive. And then also we can see their net income increased even more so, from about $900 million of net income to $5.7 billion of net income just 1 year later. So that's pretty impressive growth for ConocoPhillips. And then if I scroll down here, we can see that, or this is their comprehensive income statement. We don't have to look at that, but this is their balance sheet right here. And we can see their total assets increased from about $90 billion in the fourth quarter of 2021 to $93 billion in the first quarter of 2022. And we can also see that most of their business is financed by equity, as we can see right here. So they are making efforts to reduce the amount of debt on their balance sheet so that they don't have to spend money on interest payments, which is going to eat into their cash flows. They have about $44 billion of total liabilities and about $49 billion of total equity. And a lot of this growth is coming from an increase in retained earnings as opposed to an increase in common stock, which is good because that means that the company is actually just becoming more valuable as a result of positive cash flows, in comparison to if their total equity was increasing because they were just issuing more shares, which would have led to more dilution for shareholders, which, I mean, in ConocoPhillips' case, obviously doesn't really look like that's the case because they are outperforming, at least their stock price is outperforming ExxonMobil's and Chevron's, as we can see right here, up 43% and 100% over the last 5 years. Now, if I scroll down right here to their cash flow statement, we can see that for the first quarter of 2022, they produced about $5 billion worth of cash from their operating activities, compared to only $2 billion 1 year earlier. Their free cash flow was about $6.1 billion after subtracting their capital expenditures for property, plant, and equipment. And then from their financing activities, we can see that they repaid, obviously, like I said before, they're trying to get those interest payments down. They repaid about $3.9 billion worth of debt. And then they also repurchased $1.4 billion of common stock, and they paid out $800 million of dividends in the first quarter of 2022. So that obviously, I mean, similar to ExxonMobil, that's a lot of value returned back to shareholders. And then on top of that, similar to ExxonMobil, Conoco also announced that they were going to increase their shareholder distributions to $10 billion for 2022, which is great for shareholders. And so if we go to their discounted cash flow analysis here, these are some more metrics that I got from Yahoo Finance. Based on these metrics, it's estimated that Conoco's intrinsic value per share is $168 per share, with a 30% margin of safety of $117 and a 50% margin of safety of $84 per share, which compared to their current share price means that ConocoPhillips is currently trading at a little bit above a 50% margin of safety. So remember, when we looked at ExxonMobil, their 50% margin of safety was 116. So they were trading well below their intrinsic value per share. And then in ConocoPhillips' case, they're trading at $86 per share, but their 50% margin of safety is estimated to be about $84 per share. So although their stock price has outperformed ExxonMobil over the last year, it looks like, based on the estimates from analysts at Yahoo Finance, their stock price at the moment might not be priced as cheaply as ExxonMobil's. And lastly, we're going to look at Chevron here. And their website doesn't look nearly as nice as ConocoPhillips or ExxonMobil's, but they are one of ExxonMobil's biggest competitors, and they're also a crude oil and natural gas production company. We can see right here from their income statement that they had about $54 billion worth of revenue for the first quarter of 2022, and they had about $32 billion worth of revenue for the first quarter of 2021. So that's some pretty impressive growth there as well. And then we can see that their net income increased from about $1.3 billion to $6.2 billion in the first quarter of 2022. And right here, we can see they don't show their full balance sheet here for their first quarter earnings results, but they do show the totaling amount. So we can see that their total assets increased from $239 billion to $249 billion from last quarter. And we can also see that the vast majority of their business, way more so than ConocoPhillips and ExxonMobil, is financed by shareholders' equity as opposed to debt. They only have $29 billion worth of debt on their balance sheet, but they have $146 billion worth of stockholders' equity on their balance sheet. And we can see right here the ratio of their total debt to their total assets basically is only about 16.7%. And so if I scroll down here, we can see lastly their cash flow statement, and we can see cash provided by operating activities for Chevron came out to be about $8.1 billion, or is it billion? Yeah, $8.1 billion for the first quarter of 2022, which is up almost 100% from $4.2 billion in the first quarter of 2021. And we can also see that their free cash flow came out to be about $6.1 billion because we're subtracting capital expenditures from operating activities. And then also we can see from their financing activities that their cash dividends came out to be about $2.7 billion. And then also their shares repurchased came out to be about $1.3 billion. So also that's a lot of value returned back to shareholders of Chevron. And so if we look at their intrinsic value per share here from this discounted cash flow analysis, we can see that their intrinsic value per share is estimated to be about $319 per share, with a 30% margin of safety of 223 and a 50% margin of safety of 159, which compared to their current share price means that they are also similar to ExxonMobil, trading below a 50% margin of safety at about $142 per share. So based on the estimates from analysts at Yahoo Finance, it would seem that all three of these stocks are presenting a good buying opportunity. ExxonMobil is probably being the most impressive, considering that they're trading far below a 50% margin of safety, whereas Conoco is trading at right around a 50% margin of safety, and then Chevron is trading at just below a 50% margin of safety. So all of these companies looking pretty good. But now I want to compare them against each other with a competitor analysis in the industry. And if we look at these numbers right here, we can see that there is definitely a clear winner here, which is ConocoPhillips. We can see that in comparison to ExxonMobil and Chevron, they have a 32% just about gross profit margin compared to ExxonMobil's 24% in second place and Chevron's 18% in third place. And we can also see that they have a 17.54% net profit margin compared to Chevron's 10% in second place and Exxon's 8.2% in third place. And they have the largest percentage of return on assets, meaning they're using their assets in the most efficient manner possible in comparison to Exxon and Chevron to get net income from their assets. They have a return of about 10.54% compared to Exxon's 6.86% and Chevron's 6.52%. So if we look at these ratios, it looks like ConocoPhillips has the most efficient business in comparison to Exxon and Chevron. But if we look at the intrinsic value per share, based on the estimates from analysts at Yahoo Finance, it would seem that Exxon presents the best buying opportunity from a value investing perspective. So it's sort of like looking at these analysis like the good versus the bad. Obviously, Conoco has outperformed Exxon and Chevron in terms of their stock performance, and it looks like their business has the best ratios as well. But at the moment, it looks like ExxonMobil might potentially be priced the best against their intrinsic value per share. But I would definitely love to know what everyone watching this video thinks. Is anyone watching this video going to be investing in any of these energy stocks? If so, why? Let me know in the comment section down below. Leave a like on this video, subscribe to the channel, and I'll see everyone in the next one.